It's causing shockwaves across the entire business world.
With the FDIC now in control, customers can access up to $250,000 on Monday. But as ABC's Jacqueline Lee explains, that's not enough for many companies left struggling to manage their finances.
Silicon Valley Bank, the nation's 16th largest bank, was shut down by the FDIC on Friday after depositors hurried to withdraw money amid concerns over the bank's health.
All our money is in the bank. I don't know how we're going to do our payroll.
Not well known outside Silicon Valley, the bank's customers are largely in the tech and venture capital space, with branches in California and Massachusetts. The bank did business with companies like Shopify, ZipRecruiter, and Pinterest. In an SEC filing, streaming provider Roku said it had $487 million, or 26% of its cash reserves with the bank. The company saying their deposits were largely uninsured. Adrian Mendoza runs a venture capital firm in Boston.
Dollars were being pulled faster than the bank actually had.
According to the FDIC, Silicon Valley Bank had approximately $209 billion in assets and $175 billion in deposits at the end of last year. The bank's collapse rattled financial markets, the Dow Jones finishing the week down more than 300 points.
When banks experience financial losses, it is and should be a matter of concern.
The FDIC, along with the Treasury Department, say they have a process to deal with bank failures like this, insisting the banking system has been shored up since the financial crisis 15 years ago.
They have very good risk management since the financial crisis because of changes brought after the crisis. So I think the banking system is probably as strong as it's ever been.
And it's important to note the FDIC is insured up to $250,000 per depositor. The FDIC announcing all insured depositors will receive their money no later than Monday. Jacqueline Lee, ABC News, New York.
Jacqueline, thank you. And Governor Newsom issuing a statement today saying he's been in touch with the White House and Treasury on this, writing, "Everyone is working with FDIC to stabilize the situation as quickly as possible to protect jobs, people's livelihoods, and the entire innovation ecosystem that has served as a tentpole for..."
Headquarters of Silicon Valley Bank in Santa Clara, California today.
They just came out and told us that the bank is shut down.
SVB, the 16th largest bank in the U.S. with $175 billion in deposits, is now the biggest American bank to fail since the 2008 financial crisis. Its customers are primarily businesses and investors in the tech sector.
The root cause of the failure here was a sudden and significant increase in interest rates, that part of the job of a bank is to manage interest rate risk, and that didn't happen here.
Earlier this week, SVB disclosed it took a loss on the sale of bonds due to rising interest rates and announced it would sell shares to shore up its balance sheet. Its stock price plunged and customers rushed to take their money out. The FDIC now stepping in, telling customers they will be able to access funds by Monday, but the guaranteed amount per depositor, $250,000.
A heart-stopping moment of this bank is done.
Ashley Trenier is the CEO of healthcare startup Farmbox RX. Unable to access her money today, she fears she could be out more than $10 million.
$250,000 isn't a ton of money to us when you're talking of 8 figures that's in the bank currently.
Concern over today's collapse of SVB drove Wall Street lower. The banking sector alone down more than 4%. Treasury Secretary Janet Yellen.
There are recent developments that concern a few banks that I'm monitoring very carefully.
The immediate concern? The cash-burning startups who have millions in SVB and may not be able to access the money they need to pay bills or make payroll.
Deirdre, given what happened today, how much concern is there about the banking sector overall?
Lester, at this point, the issue seems contained to this one bank. SVB was so heavily focused on these startup tech companies that its business model put it in a risky position that the major banks don't face in the same way. Lester?